Yesterday, our worst fear came to life. Russia attacked several Ukrainian cities and markets panicked. Let's get started. If we look at Bitcoin's monthly timeframe chart, we can see that there's a support in the 33,000 to 34,000 zone. And if we take a closer look, the last two candlesticks of the months of January and the end of February are closing below the 20-period moving average marked in red on the chart. Let's not forget that there's a downtrend in the chart, as with the weekly chart. However, in the monthly chart, we're technically still talking about an uptrend. That said, if we start seeing candlesticks closing below that 20-period moving average, it would not be a positive sign. Now, let's look at the weekly Bitcoin charts. In our last technical analysis, we mentioned the descending channel breakup and the candlestick which closed above the higher part of the descending channel. Later, we saw a shooting star candlestick, which tends to indicate a movement reversal. In this case, there's been a reversal or a turn in the movement. Following the shooting star candlestick, the selling pressure drew a full-body red candlestick. As we said, if we saw a breakup and no sign of rejection without green candlesticks closing above Fibonacci 0.61, it could have led to an upward move. And now, if we apply the moving averages to this weekly chart, we can see that the price remains below the 50-period moving average. A couple of weeks ago, it tried to test it but wasn't able to reach it. By the end of the week, the last candlestick could be a hammer, which, as we always say, tends to indicate a movement reversal. Now, let's move on to Bitcoin's daily timeframe chart. As we saw in our last technical analysis, on February 4th, the price broke the upper part of the descending channel with force, which closed above that zone and indicated a continuation in the move. We also mentioned that if we saw red candlesticks closing around that important $41,000 zone, it could lead to a pullback towards Fibonacci 0.7 and even touch the higher part of the descending channel again. Finally, that movement took place, leading to a double top pattern. If we look at yesterday's candlestick, we can see a strong downtrend movement with an important volume entry. But once it touched the support, it bounced back until reaching the $37,000 zone. What does this indicate? That around $35,000, there's a lot of buying interest. In this daily chart, if we apply the moving average, it's important to note the order in which these averages are found right now. In that moment, we're talking about the death cross, in which 250-period moving averages cross each other, which took place on February 24th. On February 20th, in addition, the 100 and 200-period moving averages also crossed each other. But, as we said, let's take a look at the order. Today, the 200-period moving average is above the 100-period moving average, and the 20-period moving average is above the 50-period moving average. In other words, if now the 20 and 50-period moving averages cross each other in a downward motion, they'd be organized by size: 200, 100, 50, and 20. This would clearly indicate a downtrend. If we carry out probabilistic projections, seeing the rejection in the $34,000 zone, the price would once again reach that zone and create an evident bottom. If we start seeing a rejection at $36,000, basically red candlesticks closing below that zone, we would reach $32,900 to $34,000, which makes up most of the important support in the short term. On the other hand, if we start seeing green candlesticks closing above this resistance, as we saw at the end of January, it would indicate a reversal movement, and the price could look for the $41,000 zone. A very important zone where the resistance and the 20 and 50-period moving averages converge. As we always say, which now seems more important than ever, we must always keep the macroeconomic situation in mind in order to analyze the cryptocurrency market. In this SP 500 chart, we had a very important zone situated at approximately 4,200 points. A zone which we lost, reaching 4,100 points, a strong volatile movement. However, similar to Bitcoin, in that zone we can see buying interest, with a very important volume entry. Now let's look at the RSI, or the Relative Strength Index, where we can see an important upward divergence in relation to price. However, the movement of the index has not yet come to an end, which makes it a confirmed divergence. Another extremely important index is NASDAQ, which is located at 14,000 points, a support zone which had broken the low over the last few days, reaching 13,000 points. And as with the SP 500 and Bitcoin, there was buying pressure in that reversal zone, which once again goes to show that cryptocurrency and traditional markets go hand in hand. Despite the great drops experienced in traditional and cryptocurrency markets, as we can see in this chart, the number of Bitcoins gathered on exchange wallets remains quite low. What does it mean? That investors are still holding their Bitcoins and, at least in the short term, have no plans of selling them. The Fear and Greed Index, which measures the fear and greed in the market, indicates that yesterday investors experienced extreme fear, whereas today they simply feel fear. As seen on Nebulous yesterday, the troops of Vladimir Putin, the president of Russia, attacked various Ukrainian cities, and the fear of war affected markets to a great extent. The Russian market was most affected. In fact, Moscow's stock exchange found itself forced to close as a result of a collapse of almost 50%. Even the price of ruble fell by 10%. We can't forget that Russia is a big petrol exporter. Isolating them from the global economy will largely affect the macroeconomy of all countries. The President of the European Commission, Ursula von der Leyen, yesterday warned that the measures taken against Russia will affect the strategic sectors of the economy. In fact, they will be blocking access to technology and key markets within Russia. In addition, they'll be freezing Russian assets in the European Union. The President of the United States, Joe Biden, was very forceful and warned that they will prevent all economic activities in Russia in dollars, euros, pounds, and yen. Europe's current situation, coupled up with the foreseeable anti-inflation measures by central banks over the coming months, means that we're in for a very complicated year for the cryptocurrency and traditional markets.